plunged 22% from a high of 43,500 down to a low around 34,000 over a 2-day period before stabilizing around 35,000 over the weekend. Altcoins were hit equally hard, with most of them falling even more than Bitcoin. Will the bleeding soon dry up and lead to a recovery in crypto, or is Bitcoin now positioned for even lower prices?
Okay, welcome to the Roman Anton Podcast. I believe we're up to 22. Where are we at, Franco? 22. Well, I have, I'm excited about this one today. I did a lot of homework. So you just told me how to say your first name. Deron?
Deron, that's correct.
Deron, D-E-R-O-N. So, and do we say Wagner or Wagner?
Well, it depends if you're German or not. Originally Wagner, but I was actually named after a baseball player, Deron Johnson.
I thought you were going to say Honus Wagner.
No, Deron Johnson hit a home run when my mom was in the delivery room, and my dad liked the name, so there you go.
Deron Johnson. I should know who that is. Let's see. No idea. What team was he on? Pittsburgh?
I think Phillies.
Oh, okay. All right, right.
But I'm not sure.
All right. So we'll get into that, why Phillies are important. But welcome to the show.
Thanks a lot, Roman.
Yeah, I appreciate your coming in today. So full disclosure, you and I met at a bar, but it turns out that this bar has some meaning to us both. It's the Queen Bee on Sukhumvit Soy 26. So when I say Sukhumvit, that's the name of a street, and Soy means street. And so Sukhumvit Street 26, across from the Doubletree Hotel, Queen Bee. So that's where we met. But you have a very interesting story. I guess if I looked on your website, it says professional trader and founder of Morpheus Trading Group.
That's correct.
Okay, good. So I never know what's real or not, but I have a lot of notes here. And I started to get overwhelmed at the amount of material that you put out in your career that is trackable, traceable, and findable. And you were kind enough to bring these in today. I didn't have enough time to get stuff shipped over from the United States. We are in Bangkok, Thailand. Roman Anton Podcast is in Bangkok, Thailand. But you brought in some of your books, and as I looked, there's just a lot of good material to read, but it was very interesting for me to see how you pieced this narrative together, because you have such a consistent output in the early 2000s, and now you've moved to your output has moved to a different format, which is largely audio, right? So it's going to be on Instagram, or it's going to be on Twitter, or it's going to be through your website, but it's not as much written. But then you have your written material that accompanies the Morpheus. So it's moved from what was the final frontier of these types of books, right? Which was the 2000s. And you had one coming out almost yearly, it seemed. You were cranking this stuff out. That was a pretty prodigious rate. So I want to get to that, but I'm trying to get folks ready, as there is a lot of Deron out on the internet if you want to look for it, and there's a lot of current Deron out to listen to while you're driving around as well. So it's been really interesting looking at the evolution of your body of work and your output. So let's just jump in now. So around the 2000s, it looked like you had live shows you were on MSNBC, or I'm gonna probably say some wrong, and you're printing the books. How do you get into that? How does that become your thing? That seems to be starting at the top, right?
Yeah, I had a bit of good fortune, I guess, good timing. I started Morpheus Trading in 2002. So this is actually our 20-year anniversary.
Happy anniversary.
Thank you. Yeah, 20 years in internet time is like an eternity, right?
Right.
We actually formed a company 2 years before Facebook existed, so that puts it in perspective.
Yeah.
But when I started it in 2002, I just had the idea to share what I was doing, swing trading stocks. It was working very well. So that's what I started doing, was writing a newsletter about it. I've always enjoyed writing, and people started to follow it and enjoyed it. And then I actually partnered up with a guy just by coincidence that I met, who was also writing books. His name is Mike Sincere, and he was looking for a co-author for the first book. So he needed somebody to be more technical. So I co-authored that first book with him. The first book did well, and then I got some offers from other publishers to do some further books. And then, of course, did the whole dog and pony show,
Right.
doing webinars and seminars actually around the world. So did that for quite a few years. As you mentioned, the technology's changed a bit. Now I'm doing more YouTube videos, and we have a chat room each day where we share live commentary, Twitter Spaces, and still have the newsletter, still have the daily newsletter and weekly report. But now I'm also doing cryptocurrency trading, which is where my focus is now. Crypto didn't even exist, obviously, back in 2002, but that's where my focus is now.
Yeah, a great summary, and it's interesting because that summary is very, to me, representative of how you educate on the more recent audio that I've listened to. So I think one was on YouTube and the other was on Twitter. So very clear, concise explanations, and I enjoyed that. And I'm going to pull out the big line of my learning this week later. I got a little orange highlight,
okay.
and I'll tell you when I get there. And I want to see if I can explain it to you, because I think it's, in the world of data, I think it's a very important concept to sink your teeth into sound bites that make sense, in particular if it's about your money. And I thought, okay, I want to hold on to this one for a little bit and see. But I want to back up. So were you, when you were a young man, so let's jump back. So you told me earlier you grew up in Philadelphia and then made your way down to the Miami area and then started doing your business side of life. Is that a good summary or a bad summary?
Not exactly Philly, but close.
Okay.
A few hours away.
What did I say? Philly? Pennsylvania.
Pennsylvania, yeah.
Yeah, you grew up in Pennsylvania. So let's do the sports thing. You said sports don't matter. I love sports. Were you a Philly fan or a Pirate fan?
Actually, Baltimore Orioles.
Okay.
By default, my father's a Baltimore Orioles huge fan, so I just went to games with him growing up, and my favorite part was just getting the hot dogs and nachos.
Yeah, of course.
It's funny. My friends have always said, he's not a sports guy, but he's a computer geek, and it tends to be a lot of people are opposite. A lot of computer guys aren't really into sports, and vice versa.
But you had Jim Palmer and then Cal Ripken if you were
that's
going
right.
with your dad, right?
I do remember them, and that was cool. In fact, I went to an event one time and met Cal Ripken. That was pretty neat.
Yeah. Related to investment or related to sports?
No, just related to sports.
Okay.
Yeah.
If you showed up to tell you
No, I was still young then. I was still a kid.
He is and was an icon, right?
Yeah.
Iron Man. 3,212 games.
Nice guy too. Everybody liked him.
Yeah. Okay, so you're up north in the cold part of the country of America, Pennsylvania, and you head down south and you open up a company there, or you start doing work, or are you thinking I'm going to write investment books, or what's going on in your head? Because this is a prodigious output, and if you say you weren't really interested in writing books, I'm going to say, well, there you go.
Well, that's actually true. I wasn't interested. I guess I would say that I've always been in my blood an entrepreneur.
Yeah.
I've always had ideas, and I like to do my own thing and be creative and execute. And I just kind of, I guess, accidentally found my calling. I've always been into math and statistics, and I found that trading was interesting because if I had a strategy that worked with, like, such as technical analysis, then I was able to actually just apply that technical analysis, and it was kind of like beating the house at their own game, like going to a casino. I mean, before that, I was one time I was doing card counting and blackjack. I like to play poker using math and so forth. So I've always liked that type of thing. And for stock trading, I found a system that worked well. And I just wanted to tell other people about it. And I've always enjoyed writing. So writing the books just kind of happened. It wasn't something I planned on happening, but it made sense at the time. And I enjoyed it. And I enjoy teaching people what I learn.
Okay. So did you mention to me that you worked for, I'm going to use terms I shouldn't use and don't know, but that you worked for a house, or I was going to say something stupid like that to sound like I know about money. Did you work for Morgan Stanley?
No, I never worked for a brokerage firm. I did do some proprietary trading at one point, where we're trading the firm's money when I was very young in my career. I mainly learned just through trial and error. I had, in the beginning, I had saved up some money and lost it very quickly, figured out what works and what doesn't. And sometimes that's the best way to learn, as long as you don't keep repeating the same mistakes over and over again and learn from your mistakes. But no, I'm completely self-taught. I've never worked at a brokerage firm. And Actually started the company when I was still up north, and then moved to Miami after that.
Oh, okay, good. All right, well, good. Well, we cleared that up, and I made a mess of that. And I don't know where the Morgan Stanley thing came in, but my guys, Josh Schneider and Jason Martin up in Bethesda, shout out to them. Didn't mean to get that all mixed up, but I think about them all the time, so I was probably thinking about them and you in the same breath. So you're down in Florida, and computer guy. Man.
Yeah, basically.
Okay,
yeah,
so.
I was kind of a computer guy even in late '80s. You know, before the internet even. You know, I was on Gopher before there was the World Wide Web. You know, there was Gopher. So I've always been into using technology. And you know, when I started this company, Morpheus Trading, there was hardly anybody that was doing education of stocks. You know, through the internet. So it was a very unique thing that I was doing at the time.
That's interesting. I mean, to think that we're capable of saying that as a recent memory is just funny.
It
right?
is crazy. The pace of technology blows my mind.
Right.
I feel like, I mean, your age similar to me, and I think that we are very amazingly lucky to live in the times we're in. We saw not only everything from the birth of the internet to where we're at now, and it's like not many people can say that they've seen that. Like my younger sons, you know, they think that it always was like this.
Well, and we just laughed a little, and I was looking over my shoulder for the MP3 stick I had that was in the shape of a cassette, and you said, "Oh, you got a cassette."
Great. I love that.
But yeah, I mean, even that's probably sort of outdated too now. It's like, where do you plug it in anymore?
Yeah,
right?
but the concept of a thumb drive, like I said, is very cool.
Yeah, but I mean, to prove the point you just said. So, early adopter, I guess, is what they call you, right? And you just held with it. So, which comes first, the expertise or the book, or do they come together?
I would say that comes together because I mean I never stop learning. I mean even today, every day I'm trading stocks or crypto. I'm still learning new things every day. It's I think learning to be a successful trader is not a destination; it's a journey. You're continually there. When I had enough information that I thought was a good quality trading system that was rule based, that's when I decided to start to write the book. But in the process of writing the book, I came up with other ideas and continued learning. So I'd say that it was kind of both at the same time.
Yeah. Well, that's interesting. So let me just run through a little bit of if I try to get your footprint off the internet, this is sort of how it came to me, right? Mm-hmm. And so I tried to sort of put this together. I saw a series of 4 to 6 books, depending on how you look at it, because one of them got updated, one was co-written. But, you know, from 2000, 2002, 2007, 2008, 2012, you had a series of books that seemed to advance both conceptually in terms of the complexity of the topic, right? But also to build upon the earlier articulations. And so 2000, you know, the long-term day trader. So I guess that's the one I'm looking at here, whether or not this is the actual issue or the episode here that I saw online. Short-term strategies to boost your long-term gains. And as I looked at that, I don't think I could find too much reprinted online. This was your first effort, and I think it was at a smaller house, right? Career Press, was it?
Yes, yeah. Career Press, that's right. And yes, that was the book that I was the co-author on.
Right.
That's correct.
So how do you find a publisher in this area?
My co-author was actually already a published author.
Okay.
He had a couple books already, so he already had the contract for this book. And
Nice.
then once we did this book, the publisher liked it, and then of course I had my name on the book, so then it was easier to approach Bloomberg.
Right.
My other book was published by Bloomberg. That was much easier once I already was published. But I basically just have to write a proposal and just pitch it to a lot of publishing houses, and the more you pitch it, it's a numbers game. Somebody's going to say yes eventually.
Yeah, I mean maybe.
Or maybe not.
Right. I mean,
but nowadays you can self-publish. I mean, back then it wasn't really a thing, but now I'd recommend, I wouldn't even probably go to a publisher if I was going to do another book.
Well, and it's funny. I mean, look at how you roll here. So it's sort of like, yeah, you got a book, you publish it, right? You know, and the whole world of art and struggle is, can I publish?
Right.
And you're like, well, that's an assumption that this will get published. I got this thing, so it's going on.
Especially now with technology, being able to do it yourself. I mean,
Right.
I think the hardest part is actually just doing the work.
Of course.
You know. But if you build, what's they say, build it and they will come. You make the book and then now try to find a publisher.
Yeah, right. Field of Dreams. If you build it, they'll come. Right. So that's not lost at me as I'm going through this. So 2000, after hours trader, long-term day trader, that one there, after hours day trader, McGraw-Hill. So then you get sector trading strategies, turning steady profits even in stubborn markets. All right, so starting to get a little heady here for an average reader. Sector trading strategies, course book, Wiley. So now we're dealing with high-end educational publishing lines, and then we move to, like you said, trading ETFs, which I guess is going to be exchange-traded funds, and that's with Bloomberg. So in the world of finance, probably nothing more secure in terms of publishing or distribution than Bloomberg or Reuters or some of the top ones there. But there you are. So you're already, you're already working with the big publishing labels. So was this ever about just the writing, and was there ever any pride and consolation in being an author, or was it still I'm a trader that has books?
Well, I mean, that's a good question. I mean, of course, there's pride. I mean, it is such a feeling of accomplishment to have published books. I mean, it's not something that when I was younger I ever wanted to do or thought I would do or anything. So it's definitely a feeling of pride. Yeah. But I've always viewed myself more as a trader than an author. You know, basically a trader who's written some books. In terms of you're right, the topics are varied. I mean, the first book I was basically doing day trading at the time, and my co-author was holding things longer. And what we talked about and what the concept of the book was, well, you can apply my day trading techniques, technical analysis to the same thing holding longer. And that's why we came up with the title, The Long-Term Day Trader. Yeah. And then from there, ETFs were becoming very popular at the time, exchange traded funds. And I started using my same technical analysis strategy for exchange traded funds, which nobody was doing at the time because everyone was maybe doing technical analysis with stocks, but not with ETFs. And then the sector trading just took that another step further. But basically, in each case, I was already I started Morpheus Trading back in 2002. So the whole time I'm publishing the daily newsletter with the trade picks and the education. And the books were really just to build on the education that I was teaching every day in the newsletter.
Yeah. There's a lot baked into what you've just said. So I want to try and get some definitions here if people want to reach out to you, which hopefully is part of the goal of this is what does day trading mean? I mean, what to you? I mean, I know I read through it, and I think you even sort of define it up front. But what does that mean? I'm a day trader as opposed to
on a pure sense, day trading is buying and selling the same day. Yeah. So buying a stock or buying a cryptocurrency the same day and selling it that day. Normally, there's different strategies. Some people are what they call scalpers. Maybe they hold something only literally a few minutes and try to make a few cents on it, but do that many times throughout the day, and it adds up. There's other people that maybe will day trade and hold things 15 minutes, an hour, 2 hours. Depends on the strategy. There's a lot of different strategies, but that's what day trading truly is. Now, I started out as a day trader, and I found day trading to be very difficult mentally because it's really like a battle or fighting a war every day, and I got burned out pretty quickly trying to day trade for a living. So I took the strategies I was doing and applied it to a little bit longer time frame, what they call swing trading. So swing trading is basically catching swings in the market. Yeah. So when we're swing trading, we're generally holding positions for several days up to several weeks. So it's still short term. You have less risk than just buy and hold or buy and pray, as I call it. You're still using technical analysis, but it's not quite as mentally draining as day trading can be.
Right. Okay, well, that's good. I mean, and that's exactly what I was hoping you'd do here, because we have sort of this visible progression even in the titles. If we were just going to flip through the book rack and go through your stuff and say, right. He's maturing as he burrows down in this. But, as I looked at the 2002, the section trading, right? So you have these really nice summaries in some of these books that sort of say, hey, here's what I'm going to talk a little bit about. And I thought as you moved from day trading to long-term day trading to the ETFs, and we had the discussion of sector, you have these summaries: follow institutional money, rotate into strong sectors, buy, right? And you attach a rubric to it. Rotate out of weak sector sell. Learn reciprocal relationships. That is so easy to follow. And I've never put anything in that sequence, right? But if that isn't the way you go shopping, or if that just isn't the way to characterize what seems to be a mature approach to having money in your pocket, I thought, oh, that's very helpful to have that up front. Yeah. And so I thought, wow, what is this? There's a psychology to these things that he has. So then, even before that, 4 states, the 4 most dangerous emotions. I'm not sure if that was a recent article of yours or one of your older ones. I have a feeling
it's an older one,
right.
but I still talk about it all the time.
Right. And I can hear
applies.
You sneaking that in sort of in sound bites, but I thought, wait a minute. I don't know who the big authors are in your areas of expertise. I barely know who they are in my area of expertise, so I'm not going to step outside, but I thought there seems to be a lot of learning here that's incorporating the language of other sciences or arts, psychology, psychiatry, but that is clearly put forward in sort of the trader point of view, right? So I sort of stopped and said, wait, 4 dangerous emotions, greed, fear, hope, and regret. I thought, okay, death and dying, maybe stole those from somewhere, so let's walk through that. But then you sort of broke that down in relation to day trading, long-term day trading, and then sector analysis. And I thought, this is interesting. Oh, so you're bringing a philosophy from your experience of sitting in front of the screen to this.
Yeah. Actually, I think a lot of people overcomplicate trading. They think they need to have 1,000 different technical indicators and, the research, the PE ratio, the amount of cash on hand, and a million different things.
Yeah.
I think that it can be much more simple, and that's always been the approach I've tried to take and tried to use in my writings, in my books, in my newsletters, my chat room. It's always keep it simple. And really, if you think about it, like technical analysis, which is what my strategy is based on, technical analysis and chart patterns, why does it work? Well, it works because all technical analysis is doing is it's a visual plotting of human emotions, right? So, and human emotions over time, even though the markets change, human emotions don't. Human emotions have been the same for thousands of years, right? So what drives markets now is the same thing that drove the tulip market, in the Netherlands hundreds of years ago. It's the same. If you chart it, it's basically the same as you see now, the same charts. So basically, when there's greed in the market's going straight up. Everybody wants to buy more, buy more, buy more. When when the market starts to go down, people get afraid, so then they panic sell, which makes it drop, and then they hope it's going to bounce, and all those emotions can be tracked on a chart. And if you learn where the human emotions are going to change, you can predict turning points on the chart. So it's really all it is. If you boil it down to it, it's really just a matter of using charts to plot human emotions. And that's why that article, the 4 emotions, dangerous emotions, are really just teaching you how not to be falling into one of those traps that people do on the charts.
From your experience over time, right?
Correct. Right.
Yeah, not from
my own experiences.
Right. There's no wily horn book that was out there that said this is how every trader shall trade. In the 1950s, right?
Exactly. Yeah.
Sharpen your pencil.
There's a lot of good strategies out there, and I would say, what's a good trading strategy? Well, it's one that makes money. I'm not saying mine's the best. It's one that works. But there's a lot of strategies out there. And over the years, of course, I follow other traders too. And my ideas are always getting refined and improved too.
Yeah. Interesting. So I'm going to look down here a little bit while we're doing this, because I thought there was a thread going through all of this, but I'm learning more about you and less about, or more about how bad I try and figure stuff out. But so we didn't really define these ETFs, and you wrote about that, and I said we wouldn't talk that much about it, but could... exchange traded funds. So to me, when we talk about trading, you get a stock, or you have a commodity. I mean, I'm a simple guy, so it's going to be corn or gold or ExxonMobil or whatever you have, right? This exchange traded funds is a newer concept to the world of trading. Is it 10 years old, 20 years old, 30 years old, 100 years old in terms of stock trading?
It's about 30 to 35 years old. I believe the first, don't quote me on this, but I think the first ETF was either late 80s or early 90s.
Right.
The most popular ETFs that a lot of people know is SPY, SPY is the symbol. That's just when you buy SPY, you're buying the S&P 500 index.
Right.
Basically, it's a way to buy the entire index without buying a mutual fund. Or there's QQQ, which is an ETF for the NASDAQ 100. When you buy QQQ, you're buying basically a portion of every stock in that index. So those are the ETFs people probably recognize. A lot of people, if they're in the stock market, would know about QQQ and SPY.
Yeah. Okay. And so I think you say in this book, you treat it like a stock, the way you manage it.
Right, that's right. So basically when you buy an ETF, you're buying a basket of stocks.
Right.
But the basket of stocks still trades like a stock. I mean, you can still chart them. The charts work the same. And that was kind of the whole idea of the book is, hey, you can still treat this like a stock, even though it's not a stock. They're just going to be a little bit less volatile, but they trend very well because it's a basket of stocks that make it up.
And so what is it that drew you to it then that no longer draws you to it as something you want to write about or commit substantial energy talking about it?
Well, I'd say that ETFs became came to be too many. The market got saturated, and there just ended up being ETFs for anything.
Yeah.
Some of them didn't do any volume, and it really just became kind of like the market got oversaturated, I'd say. And the things I talked about didn't really make it still makes sense, but maybe not as effective as if there was less ETFs. And I guess that's one thing is, the market got oversaturated.
Yeah.
Everybody and their brother was launching an ETF. But the other thing is I discovered cryptocurrency, which is what my passion is now. I spend most of my time on crypto, not stocks anymore.
Okay, good. And you're good at dragging me to points way out ahead there. So I'm going to go a little slower still. Because as you then wrote Advanced Technical Analysis, which was a 2012. So we're getting pretty close. We're 10 years. So you had your 20-year anniversary this year, but 10 years ago you wrote a book that was Advanced Technical Analysis, which is going to be looking at day trading, long-term trading, ETFs. So you have this new wealth of knowledge that's now tested out, and you can tour the circuit on it, and you're on MSNBC or wherever else, right? And you're not looking for the next great thing, but it's coming, but you're still teaching on it. And so now your themes in the book evolve. All right, so you tell me, well, there's 4 trading time frames. If you didn't catch me earlier, here's the 4 trading time frames, right? So, traditional, like me, hey, Jason, Josh, how we doing? And they're going to push me and say, leave it how it is. Position trading, swing trading, day trading, right? So your themes are now summarized and you have a lot to talk about. So we move quickly into the book, 5 steps to master trading. All right, so now you're going to say, hey, all right, if you're with me so far, we've got this other thing, and you can see the analytical component coming out in you, right? I mean, that's where your head is now. It just seems to me as a reader of an author over a period of time now, we're benefiting from hanging on with you because now we're getting deeper into what you're learning is working and what not's working.
I think in the beginning there's just so much to talk about, and you don't want to overwhelm or confuse people if they are not familiar with your strategy at all. So I tried to really focus on just the key components in the beginning, things that'll work, and then that the advanced technical analysis was exactly what it says, getting more into the advanced strategies. And a lot of that is, things I've been learning over the years. As I mentioned earlier, I never stopped learning, and as I improved my system, I wanted to share that with the advanced book. So yes, that is the case. It does kind of get more advanced as you go, but always revolving around the core concepts and staying simple. Keeping it simple is the most important thing.
Yeah, and I like the way you articulated the 5 rules. And there was one in there that I stopped to look at, and I thought, I'm gonna look around on the pages before to see if I missed this one coming. But it's so simple. Have a disciplined money management strategy. Okay, not that complicated a thought, but yeah, it is. Because I'm sure you see in your world and, at wherever you guys hang out or if it's in a virtual chat room, but like discipline must be everything, right?
Well, it really absolutely is. I mean, you can be the best stock picker in the world, but if you don't cut your loss in time or you don't take profits at the right time, then you're still not going to make money. So, I mean, discipline really is key. And in terms of money management, I mean, like that rule, what I mean by have a money management strategy is have some rules, make it like defined within rules. Like give a good example, if I may, is if you're looking to buy a stock, for example, you would never want to put 100% of your portfolio into one stock, because if something goes wrong, you have a big loss. So what I do is I risk a certain percentage, and I talk about this in the book. I say maybe you're going to risk 1% of your account per trade, or maybe a maximum of 2%, depending on your personal risk parameters. So let's say you risk 1% of your account. And for easy math, let's say you have a $10,000 account. So 1% means you're only going to risk $100 on that trade.
Right.
The idea is if you're wrong 10 times in a row, your account's still only down 10%, right? And so if $100 is your maximum risk, and you know you're buying it, let's say you're buying it at $20, and you need to set your stop at $19, meaning if it hits your stop, you're out automatically. So then you just divide the math. I'm risking $100. I have a 1-point stop. 100 divided by 1 means I can take 100 shares.
Yeah.
So that's all it is. It's as simple as that, just having a simple technique to keep it consistent in terms of the number of share size and the money management.
Yeah, I mean, it's interesting because, you see you're out there. You can do the math in your head. You gave us concrete examples, but we say, oh, yeah, he's a public speaker, so he knows how to do this. He can do that. Not that hard. I would guess your average investor buys a house, a car every now and then, has some stuff that for the retirement fund, but never has that money management strategy articulated, right?
Yeah, I guess. I mean, I mean, we try to educate. So if they discovered us, hopefully they're following that. But,
right, and this is the whole point: is there are people out here who do this, right? And hopefully you find the right ones. But it's so identify broad market trends, identify proper trade setups, have a clearly defined exit strategy, which you just alluded to. Then here's mine: have a disciplined money management strategy. Understand the psychology of trading. Well, there it is again.
Right.
So you're bringing back your other themes, and I like how this starts to weave together, because as we jump forward and go to your most recent crypto analysis online, it's all in there. It's all woven into that presentation, and I found it very interesting how, over the 20 years now that, at least what I studied, how if I listen for those bells or lights, listen for the bells or see the lights go off. I don't want to mix my metaphors. It's interesting how they tie together. And so, you're pushing your Morpheus trading sort of the top-down strategy, and it's complicated if you look at it and you look at the chart and your eyes start to roll back in your head if you're a guy like me and says, wait a minute, that's too complicated for me already. But as you start to break it down off the chart into these areas, it's, risk control. It's just it's a simple but well thought out risk control model that if you just hold on, you can go through it sort of piece by piece. It's very easy to conceptualize if you just keep these Now, I'm not saying I can trade off of that, but it was reassuring to say, wait a minute, he's not saying learn Fortran and Boolean and all that.
Right, exactly.
It's not like I don't have to learn a new system, right?
I think that that's one of the things I found is that some of the educators in the space, they have great systems, but it's hard for people to follow. Yeah. And if you can't understand a system, you can't clearly understand it, then you're not going to be able to follow it. And if you make mistakes, then you're going to lose money, right? So I mean, I want to avoid analysis paralysis, like using 100 different indicators. Just keep it real simple. I mean, price, volume, some basic trends, and understanding human psychology.
Yeah. Right. I mean, it's. Yeah. I mean, I'm stuck here for a little bit because I'm starting to hear the echoes of what you said in the Bitcoin link that you sent to me. We trade what we see, not what we think. Yeah.
That's really important because, and I've been guilty of that myself, but I mean, over the years, every time I've had a loss or something went wrong, it's always because my ego got in the way. And that's what that really is saying is leave your ego out of it, because most people don't want to admit when they're wrong on a trade. It's hard to sell because you're wrong. You want to be right, but that results in you trading what you think. I think it's going to go up because why? Because I believe it is. Well, the market doesn't care what you think. The market is completely irrelevant of what you think. So, I mean, you need to trade what you see, what the market's doing. What you think has nothing to do with it. And if you can really understand that concept, that really is huge.
Yeah. So I think what we've done is gone quickly up to the 20-year time period now. So help me understand, if you can, a little bit before we talk about a couple of the points that I took out of your Bitcoin update from this month. I don't want to say this week. I think it was maybe last week, but recently. And I noticed that on your Morpheus website, and we'll talk about that later, you've already had 4 updates this month. It's not every day at 5. There's another part of the tool that has daily stuff, but significant updates. So it's sort of a smorgasbord of stuff on your Morpheus trading website, and we'll talk about that. But bring us back now. So you get interested in crypto. When is this known to a guy like you, and then when did I learn about it? Just add on 3 years later, right?
Well, Bitcoin was created in 2009.
Right.
I discovered it in 2013.
Okay.
Now, I actually discovered it because I had another techie friend of mine who was actually an early investor in Bitcoin who did very well with it. And he got me interested in Bitcoin when it was trading at just below $100,
Right.
which is pretty amazing looking back and seeing, at 40,000 now, when it was $100 when I started trading it. But at the time, there weren't a lot of other crypto coins either. It was Bitcoin, and there were some others, but it wasn't like the 16,000 we have now. And the main thing is right away, I was already trading stocks for, more than like almost 15 years, I guess a little less than that, when I discovered cryptocurrency. And I thought, well, I wonder if the technical analysis strategy I'm doing now in stocks would work also the same in Bitcoin. And to my pleasure, it actually did work the same. In fact, I would even go as far as to say that technical analysis worked better on crypto than with stocks because there's less manipulation at the time. There's less institutions playing games, and just more pure human psychology. So the charts tended to trend better. So basically, I started refining the strategy that I was already doing and just tweaking it and learning more about crypto. And I really became fascinated with crypto, and that became my the main tool that I started trading. And that's why I started this service last year with Morpheus once I refined the system to teach people how to trade crypto as well.
And so let me just make sure I understand. So 2008 or 9, the dawn of crypto, what was created then? I mean, what actually, because to me, I still can't see it, right? Maybe it's a server farm, or maybe it's, I know I get my monthly statement from Morgan Stanley. I can see that, and there's stocks listed on it. So I think I must own stock somewhere. But what am I getting when I own a crypto? What is that?
Well, it depends which one. I mean, they're all very different. But let's start with Bitcoin because that's what most people are familiar with. So in 2009, Satoshi Nakamoto, which, by the way, is no one knows who it is, completely anonymous. We don't know if it's a person. We don't know if it's a group. I mean, whoever invented it wanted to be anonymous, which is amazing, I think.
Very cool.
But Satoshi Nakamoto basically wrote the white paper for his idea for a decentralized currency, and started writing the code for it. There was other people involved in the group, and deployed it. And the code was written in such a way that the big key point of Bitcoin is that it's finite. It's deflationary, meaning that it's not deflationary, but there's only so many Bitcoin that can be created. There can only be 21 million Bitcoin created. There's currently 18 million Bitcoin out there. There's going to be 3 million more Bitcoin mined over the next, I think 2046 or 47 is the last Bitcoin that's going to be mined. It was fascinating that it was written in such a way that the idea being that keep in mind, this came out right after the 2008 financial crisis in the U.S. with the banks, and that was one of the responses to it was the creation of Bitcoin, because the idea being that the government can't play games by just printing more money, which is what caused a lot of the problems in the past, and the idea being that this is a real system of money because it can't be manipulated by governments. Like, this is how many Bitcoin there is. That's it. It's true supply and demand. You can't just print more Bitcoin to help the economy. So that's the idea. And basically what you're buying is you're buying ownership in the code. Like you have, there's only so much, it's all computer code on the blockchain, And when you buy Bitcoin, it gets recorded in the blockchain that you own this much of Bitcoin.
And so when you talk about, and I'm sorry that the numbers were so large, I forgot what they were, but there are X in existence, and in 2046 it'll be done. I think you said 21 million.
No, it's 2146.
2146.
Yeah,
Okay.
like another 100 years.
What's happening? Why is it so hard? And what is? Yeah. So help me understand the back end of this, though.
Yeah. So the code was written in a way that that basically new Bitcoin is created when a mathematical equation is solved. Okay. So it's a mathematical equation that has to be solved, and each time a Bitcoin is mined, it's called mined, not created. It's called mined. Each time Bitcoin is mined, the equation now becomes exponentially harder to solve. So what happens is each time a Bitcoin is mined, it takes longer and longer before computer systems can mine, before nodes, as they're called, can mine the next block of Bitcoin. So that's why, and that's why there's already 18 million, but there's only going to be 3 million more in the next 100 years or so.
Because of the complexity of the
correct.
code.
And that's why the systems in the beginning, you could mine Bitcoin on a laptop. Right. Now you could never do that, So now there's entire server farms, that are doing it. So
that's interesting. I just heard a podcast with someone who said I was trying to mine from my laptop back then, and I thought
you could back then.
Right. What I thought. Yeah. Okay. So did you?
No, I didn't.
Were you the next step bigger? Did you guys have a server room, or was there some? Okay.
No,
so,
I guess I didn't quite see the potential as much as I should have.
Well,
I would have been mining. It would have been a great thing.
Or you didn't want to buy, X
it's a lot of
$100,000 worth of equipment.
Yeah, exactly.
And so now these sort of the Avengers style stuff that I hear about is whole forests in Oregon are taken over to these server farms that are trying to crank out these formulas. I don't know if that's true or not.
Well, a lot of them are green now. They're using a lot of green energy.
Okay, so right, there you go.
Like El Salvador, for example, which, by the way, El Salvador is the only country in the world that made Bitcoin legal tender, which is very, very cool. That's another story. But in El Salvador, they're actually using geothermal energy to mine Bitcoin. They're using energy from a volcano to mine Bitcoin there. So talk about green energy.
Yeah. So is there some presumptive winner to this battle to get the remaining 3 million?
It's pretty spread around the world, I would say. It's there are countries that are taking an interest, but it's more just private, I would say. I don't know if there's a battle. The battle is in the technology, like always trying to create a faster and better processing unit to mine faster.
And Bitcoin is just one example. So
Bitcoin's just one example.
14% of the overall amount of Bitcoin. So it's an infinite number in actuality, but it's not 80%. It's
right. Well, the other cryptocurrencies don't work quite the same as Bitcoin, but it's all blockchain. It's all decentralized.
Right.
That's the idea.
And so, so there's myth number one. To the extent any of you shared the same absence of knowledge on what this farming is all about in the Bitcoin context, it's even if one country or another figures out the Bitcoin solution to get those last 3 million, it's going to be at a significant cost, and it's not going to make them the emperors of the universe. It's just going to make them rich.
Yeah,
okay.
Exactly.
So then there's all these other ones that have some other similar or dissimilar way of coming into creation, but they're part of the stratosphere of 16,000, you said, or many types of different cryptocurrencies?
Yeah, there's about 16,000 now.
Okay.
Yeah.
All right. So then those are different wars and games and adventures you go on to create that.
Right.
So you start 2012, 2013, you have these books coming out, and you start trading. So how do you trade a cryptocurrency if by your own definition it is in the blockchain and it exists as a code? Mm-hmm. And there's not a regulator that mucks up the process and says you have to have 2 little I's first, and then you have to have quotes around it, and you got to have a name, and you got to have an account here, and all this stuff. What were the differences that you saw from having this type of setup where you were probably dealing with U.S. listed stocks only when you began, and New York Stock Exchange or of that nature, and then NASDAQ, and then you maybe moved elsewhere? I don't know, but what are you doing now to get started to trade crypto? What was either you or the Morpheus strategy to get in this program?
Well, one of the first differences I thought was interesting is the market's open 24/7. There's no market hours, like you're used to in stocks. So you have to come up with a strategy that's going to work other than like not sleeping. You got to find some other system because the market's open all the time. I found it very refreshing that it wasn't regulated in a traditional sense. Now I know that regulation is going to come eventually. It's going to come, but in the beginning it was the Wild West and nobody really cared about it, and no one ever really thought Bitcoin would become what it is now, right? I mean, well, obviously some people did, but a lot of people didn't. So governments didn't worry about regulating it until basically it's too late. Now they want to regulate it, but it's grown too much for them to be able to really regulate it the way they wanted to. If they would have tried this a few years ago, it'd be much easier. But basically because crypto is all about decentralization. Right. So, I mean, that's the big difference is that, like nobody owns Bitcoin. No country owns Bitcoin. I mean, it's code that's whoever owns Bitcoin. And no one, the U.S. might want to say, well, we want to regulate Bitcoin. Well, the only thing they can really regulate is converting that Bitcoin to the dollars. Maybe they can give laws or rules at the banks, how they handle it, but they can't regulate Bitcoin itself. It's not owned by the U.S. And that's what's fascinating about crypto is that it's international, it's decentralized, and and I find that to be pretty fascinating. The fact that it's all decentralized.
So, could it be? Well, I'm not going to get into the fantasy of the nonsense of like walls and barriers that a country could enable to say, we will watch you try and convert your crypto and we will block you from doing that somehow. That seems
China's banned Bitcoin. It's illegal. Bitcoin's illegal in China. So,
but with the VPN,
sure, but you still, that's the point. How do you stop it anyway?
Right.
You have a VPN, you can still have Bitcoin.
And I don't even know what that means when I say that, but I know I've been instructed to say that you can get around the great mighty wall if you do that. And I'm not suggesting anyone do that. I think if it's a crime, then it's a crime, and I would say don't do that. But
don't do that. Right.
Okay, so I think you've divined the opportunity for me. So let me use outdated, antiquated thought process here and see if it applies. If you talk about the market is open, I think you said the market. I don't want to put a word in your mouth. We can go back and look at the tape, but I think you said the market's open 24 hours for this. I can say, okay, I'm going to try and use the words I know. Is there a market capitalization? So if you said there are 21 million shares, there are 3 remaining. So let's just say there are 18 million shares, and it's trading at $40,000 a share. Is that the current market of cryptocurrency for Bitcoin? Is 18 million times 40,000?
Yeah, the current market cap of Bitcoin is right around $1 billion. A trillion. Not $1 billion, $1 trillion. Right. Total market cap for the entire cryptocurrency market is about, now the market's down a bit, about $2 trillion. And Bitcoin's about 900 billion currently. So Bitcoin is about 41% of the entire cryptocurrency market. But that market cap has grown dramatically. I mean, just in the past couple of years alone, I think in the past 2 years, it's something like a 500x. I mean, it's real, and we're just getting started. I mean, the crypto market, I believe long term, has the potential to overcome the market cap of the U.S. stock market.
What is the market cap of the U.S. stock market? Is it?
I don't even know.
Is it 50 trillion?
I think it's around 200 or something like that.
That's such a ridiculous number. Yeah. I mean, and back to your argument, if there's a paper dollar for every one, that's a lot, right?
Yeah.
Which maybe there is. I mean, maybe that's how that works, right?
But you got to look at the weightings too. Like, I mean, Apple is, Apple's huge. When you get one company that's so many billions, I mean, it's very weighted. Like, for example, the NASDAQ, a few months ago, the NASDAQ was actually holding up pretty well, holding up near its highs. Yeah. But a lot of stocks were getting killed. A lot of tech stocks were down 50, 70% off their highs. You're like, how is that? The index is still near the highs. Every stock I own in my portfolio is down. It's because the weightings, some of the big companies in the NASDAQ are huge, and there's such a high weighting in the index. Yeah. So it kind of is deceiving, like how healthy is the market when you're looking at companies that are huge like that.
Right. So weighted average is a measure that you look in your advanced, or maybe you're not advanced statistical analysis, but that's something that you say, well, okay.
I think it's easy to deceive people by using weighted averages.
Market down 80% on average.
And not only that, people say, well, if you buy an index and just hold, it'll always go up and you'll always make money. Well, that's only because underperforming stocks get removed from the Dow and the S&P and the NASDAQ. So yeah, if you hold the index ETF or an index fund, that's true. Yeah. But if you buy all the stocks in the S&P 500 now and hold them for 20 years, you're probably losing a lot of money because if you're not changing it,
right.
the index.
Right. I mean, a bankruptcy would be a great example
Right.
of why that is a ridiculous
Exactly.
metric. Right.
Right.
Okay. Well, good. So I'm starting to get the idea of the multitude of things that you probably dealt with in week 1 in 2012 that I'm just catching on to for crypto. But so so if you are trading, and you're doing this through the blockchain, I mean, so you're communicating. So your Morpheus tool is communicating somewhere on behalf of a client or on behalf of third parties that you work with or affiliate with, and you do these trades. Is your tool? I assume you didn't buy this off the shop at Big C here, or
Well, what we have, I mean, basically what we have is a couple different things. One is we have an actual educational newsletter and chat room now. So that's for people that want to do the investments themselves, but like follow our strategy.
Right.
So they can basically subscribe to our Morpheus crypto service or our Wagner daily stock service. And in that case, then they get access to a report, and we have a portfolio. Every time we get in or out of a trade, we send a trade alert to your phone, to your text message. We say we're buying here, we're selling here. So the idea is you can kind of mirror what we're doing on your own. And the idea is to learn, not only to give you the fish, but to learn how to fish, at the same time. So that's one of the services. People can pay a subscription for that. But then we also actually have a small private fund, crypto fund, where if people want to, maybe they know they need to have some exposure to in their portfolio to crypto, but they don't want to learn themselves. So then they could invest in part of the fund. So with that tool, that's actually proprietary trading. So it's basically discretionary based upon like what I'm looking at. We don't actually have a black box or any type of tool per se.
Right. And so I would, let's just use an example. I would give you $1 or 300 baht or 130 baht, and it would go into an account that you have, that you've created for me or for us, or it would go into, and you would invest that on behalf of that fund.
Correct.
And then I would participate in whatever happens up or down.
Percentage of the total assets, right?
Yeah. And so then I would sign a approval for you to trade my money or invest my money, and you would say, I'll do it.
Actually, that's the interesting thing with cryptocurrency. You don't even need to do that.
Okay.
Nowadays, there's what they call smart contracts. And smart contracts are really, I mean, if you've never heard that term before, you'll be hearing it for sure in 5 years, 10 years. I mean, it's the future. Basically, what smart contracts are is just computer code that's written in a way that when a certain interaction happens, that this interaction happens. So basically, they're one of our funds that we run is actually done entirely through smart contracts, which means that when they deposit the funds, the investor deposits the funds, automatically a certain percent gets allocated to the basket. Whenever there's profits, gets distributed properly. It's all automated. Right? Like there's no human interaction whatsoever, and that's the future with cryptocurrency. Is that you've got smart contracts such as DeFi. I mean, that's something that's interesting to talk about. It. I don't want to steal your thunder, but if you
go ahead.
It's something too. DeFi is a good example. DeFi stands for decentralized finance. Now, people obviously are familiar with banks, and that's what they call TradFi, traditional finance. Right. The difference with DeFi is that basically you become the bank. In crypto, you can become the bank. So, for example, there's companies like some of the original ones, Compound or AAVE Finance, where you can basically, if you own Bitcoin, you can deposit your Bitcoin through one of these DeFi platforms. And using your Bitcoin as collateral, you can actually get a loan out against that. So you can basically borrow that capital, and you can repay it anytime you want. The interest terms are very small, several percent. And then they actually pay you interest for depositing your Bitcoin there. So it's like basically all the ways where the banks would make money before as the middleman, you get that benefit now in blockchain. You become your own bank. And there's no human interaction. There's no credit checks. There's nothing. I mean, it's computer code. If you've got the assets there, then the automatically system responds. So that's just one example of smart contracts as in the DeFi place. But it's really interesting because there's less and less human interaction involved with crypto, which is why more and more, I would say that the more things get decentralized, the tougher it becomes to regulate as well.
Yeah. Yeah, and that's one step further than your introductory platform where I say, here's my dollar, you guys do your thing to it. Now I've gone one step further, and this is me actively doing that on my own. So I'm sure there's a Morpheus module for that as well. But I get the sequence of how I get in this. So let's jump back to Morpheus and what you guys offer in a minute, but let's talk about this Bitcoin rally, because I want to, and I'm sure you repeat this line, but I want to make sure I get it right. So the most important tenet of technical analysis is a prior level of support becomes the new resistance level after the support is broken.
Right.
I heard that and I thought, okay, all right, I love that line. I'm going to figure this out. So you have these crazy graphics that you show that you look at all day long, I would bet, right? I mean, you just got 4 of these or 10 of these screens.
Post charts throughout the day, yeah,
right?
exactly.
So, we're used to seeing it. It looks like snow-capped mountains or jagged teeth or, skyline of Manhattan or whatever it is. And it could be years or months or weeks or hours or days. And you're saying you can do statistical analysis on this, and you attach words to this process. And so, a most important part of this technical analysis is when you're looking at things, there can be a bottom of the ocean and there can be the surface of the ocean, and those roles can change. The bottom of the ocean can become the top of the ocean. I'm not using a good analogy here, but you can see trends. And so if you want to be critical of the crypto person and say there is no crypto, it's a fiction, and you say, well, okay, fine, I'm gonna, I don't have to indulge the game of trying to prove the existence of something in the blockchain, so we'll move on and have the actual debate. And you look at the thing over time from 100, or I'm sure it started at 0, but maybe not, so it's 100 to 45,000 or whatever the top was, 60,000 or 80,000, whatever it went up to. You see opportunity to analyze that. And so when you have these trends happening, the event you may be waiting for, when it comes and passes, may set the new event that you measure off of going forward. And I thought, what an interesting way to sort of dispel the myth of, what are we paying for you to do? And you say, it's for me to understand this thing over time and to constantly analyze it. So I analyze it on the hourly basis, the day trading basis, then the long-term day trading basis, then the longer term, and then I identified, the broader market trends that go along with this, and the series of things that you built up, and the way you broke that down when you used that quote, I thought, oh, that makes a lot of sense to me about why today is maybe the time when, resistance at prior levels, the 50-day moving average. Okay, now's the time. We're seeing a pullback. All right, now we're getting ready. And all of these terms, how you're linking them together, sounds like the stuff I've always heard, right? It's the same, there's a technical analysis to this now, right?
Well, it kind of goes to what I mentioned earlier about technical analysis is just human psychology.
Right.
And that, once again, this is why it works. And you're right. I mean, what I said earlier, that quote you said, the most important tenet of technical analysis is that a prior level of resistance, becomes the new support after the resistance is broken. Well, what that means is, let's just use an easy example. If Bitcoin's at 10,000, okay, and it drops to 9,000. Now it drops to 9,000, stays there for a week, and then it bounces back up to 10,000, okay? The next time it comes down to 9,000, it's likely to bounce again. That's called support, because that's the level where a prior level where people bought. That's called support. Okay, but now let's suppose we bounce again off 9,000, go up to 10,000, and now we bounced 3 times now off 9,000 over the past month, just for example. That's a firmly defined support level. But now, if the next time we don't hold 9,000 and we go down to 8,000, okay, and we break that level, that 9,000 level is no longer support. That now becomes resistance. Because when you rally now, you're going to have trouble getting above 9,000.
Right.
Why? It's real simple. It's human psychology. Everybody who didn't sell when it broke 9,000, guess what they're trying to do now? As soon as it gets up to 9,000, let me just sell to break even.
Yeah.
And that causes the resistance, right? So it's basically that's where the support and resistance comes from, is when people sold or they didn't sell.
Yeah.
Just understanding
That's such an interesting, because to me it really felt like I was reading in terms of psychology as opposed to analytics. And I make up the word analytics like I know what I'm talking about. I'm using it, but statistics or something that I maybe have some background in. Did you apply these same principles back in the day on the paper stocks that showed up in your mailbox?
I think I didn't learn as much how relevant psychology was. I mean, like I was doing the same things, but I think I didn't really discover until doing it many years, like how important understanding human psychology is.
Yeah.
It really moves the markets. If you understand how people think, you can understand where the next move in the market might be.
And do you think your comrades in China or elsewhere around the world think in terms of, I mean, is the lexicon common? Is the language of this common to the educated? Do you think everyone
I think so.
So if you were to say, this is resistance and not support, there would be a translating tool on Google that someone elsewhere in a foreign country would say, we agree with that language that you're using to describe this, and we understand that it hit that 3 times and now it's turned from support to resistance because it dropped to 8.
Yeah, for sure. I would say that it doesn't matter what market you're in, whether it's crypto or stocks or tulips. Okay, I mean, the technical analysis, no matter what the product, it works the same. And I gave a live seminar in China once, and had several hundred people there, and they all understood the concept of support and resistance as if they had already learned it. I mean, I think it's pretty well understood by people who've studied the markets a little bit.
Yeah,
and accepted.
Right, and that just shows how little I know. But I wondered if there's a common language, or if this is once again falls into the people who know how Formula One racing works have a whole separate language, and you're like, what are you guys talking about?
I think the basic terms like support and resistance, those are some of the more basic terms you learn when you first start learning anything about technical analysis. But then it gets much more complicated from there if you want to go into Fibonacci ratios and things like this.
Right, yeah. I was looking down, I was listening. I didn't mean to turn my attention away. And so that was the one of your later or more recent, I guess I'll say, within the last 30 days. I mean, there's only so much recency we can have here. So Bitcoin was trading at do we say trading or
trading,
priced at? Yeah, I think it's 43 or 42 today, or 40,000.
42 last I looked.
Right. Okay. So, and so you're writing about that, and you're trying to analyze the market right now, and those were really interesting to listen to. And I think if you get in and listen to that, just that one, and then head to your site and start looking at, this is not out of reach. This is very, it's easy to put your hands around because of your explanation, is how I'm going to put it here. It's not the thing in the closet that you never open and go look at.
Yeah, I think that, if someone can understand how to buy and sell a stock on, let's say, E-Trade, for example, then they can understand how to do crypto. But there's a lot of things that are different. So one of the things I'm actually doing now actively is I'm doing a lot of webinars, like free webinars to teach people what's different about crypto versus stocks, and every month we're running webinars like that so that they can learn the basics of how the exchanges are different, what's similar to stocks, what's different. But once you've learned that, it really is pretty simple. And I think that, following our strategy, the key is just really just if you can just get in the chat room every day, that's a big thing, because every day I'm in there talking all day long about, we're looking at this, we're looking at that, and I'm using annotated charts as examples. Like for example, Bitcoin recently, when it sold off from the high of 69,000 all the way down to 33,000 in late January, a lot of people were afraid and said, oh, Bitcoin's down 55%. It must be the end of crypto. But what people that may not realize is that there's been 2 85% corrections, 85% from the highs to the lows, since Bitcoin's been created, and each time it goes to new highs. It's more volatile than stocks, but this is nothing more than just a normal correction within crypto. So then I did a video talking about that and showing where the levels would be, and the market followed what the analysis was, and we rallied to where we said we'd rally, and we pulled back right now. The past couple of weeks have been following exactly what we posted on YouTube.
Yeah.
So it can help people to time the markets a little bit better.
And so if I'm an investor and I have $500, do I come to you, or is that not the type of way that's best to enter the Morpheus tool? Because you're talking about something that is the price of a car, right?
Yeah, well, I mean, I'm glad you brought that up because a common misconception is that you need to buy a whole Bitcoin.
Right.
That's a very common misconception. I mean, I think my mom probably thought that when I first started talking about crypto. Oh, I can't buy a whole Bitcoin, but it's actually, you can buy as much as $1 of Bitcoin. You buy 0.00008 whatever Bitcoin. So that's the first thing you have to understand. So the amount of money that you need is irrelevant. I mean, and the fees for trading on an exchange are also very low, like 0.1% or something like that. So you can start with any amount of money.
Right.
And obviously, I do recommend that you don't start with your full amount of money when you're learning because, obviously you're going to make mistakes. You're probably going to lose some money in the beginning, and it's good to start small, work your way up. What a lot of our investors in our fund do is they actually started out as members of our chat room and our report to learn the strategy and become comfortable with what I'm doing.
Yeah.
And then they maybe do it on their own, but then they also have us invest as well.
Okay. And so then this brings us to the tool itself, and I think I got to page 3. So you have the MorpheusTrading.com, right? Mm-hmm. And Morpheus, MORPHEUS trading.com. And then you have a pull-down list of what you can do. So there's several options. You can go and read your old stories in written form. There's some recordings. There's a blog, yeah. And then you can subscribe, and then you can obviously move into a paid tool, which I assume opens up a whole new echelon of stuff that you get. And then
in the chat room.
Yeah. How long have you been? I mean, you open the company, and then you have this interface. It's hard for me to tell how long it's been at the current state that it's at. Has this been 5 years, 10 years, 3 years?
In 2002, I created the Wagner Daily, which was my first paid service. It was basically a daily report that I was personally writing every day with technical analysis of stocks I was looking at, chart patterns, but it was educational at the same time. It was teaching people how to trade and then also giving the stock picks. We've been publishing that, I'm very proud to say, every day, every market day for 20 years. I think we maybe missed 3-4 days, something like that. I have my right-hand man, his name is Rick. He actually focuses on the stocks, and I do the crypto. So I'm actually writing the crypto report myself now, and Rick writes the stocks. And I run the crypto chat room, and Rick runs the stock room. And we have some other members, but we're the two core people running the program. But the stock program, like I said, started in 2002. Crypto started just last August. So prior to that, we only offered stock trading, but now the market's maturing. So now we're also offering the crypto trading as well.
And so what other cryptocurrencies do you talk about in there? All of them? All 16,000?
No, not all 16,000.
You've only missed 3. You've missed 3 days since you started the Wagner report. In 20. So it sounds like you are working all the time.
No, we have. I mean, we have obviously some filters that'll help narrow the list down a lot. For example, we don't trade anything that's really small market cap. If it's really tiny market cap or no volume, that's really dangerous because there may be no liquidity when you look to get out, or there could be manipulation. So we're not looking to trade any like micro cap cryptos. We also tend to stay away from the brand new cryptos that just started trading because there are a lot of scams out there. Yeah. And we try to keep all of our members safe, and we do some basic research before we trade any of them. It's one of the downsides of no regulation is there's a lot of scams, but there's a lot of benefits too. But so we have some basic filters. Most of the cryptos that we trade probably are in the top 200 or 300 by market cap. So like that list of 16,000 is probably narrowed down to more like a list of a couple hundred. And then from that list, we now look every day what has the most relative strength. That's one of the key strategies we use now is what shows relative strength. In other words, if Bitcoin is going sideways, not going up or down, but one of the cryptos you're looking at is going higher, even while Bitcoin's going sideways, that's called relative strength. And as soon as Bitcoin bounces, that's going to be the first crypto to rip to new highs. Or if Bitcoin starts going down, that crypto is probably going to go down at a lesser percentage than Bitcoin. So that's relative strength, which is one of the key things we look for, combined with chart patterns.
And so you have a tool that would show me those 200 that you're studying, and I could get access to that to look at the
Well, we don't have an automated scanner.
Okay.
It's actually my brain.
Okay.
It's me every day, like a madman looking at hundreds of charts.
Saying here it
and
is.
then filtering out from those 100 charts. Like right now, there's 4 or 5 that we're in our portfolio that our members are in. So out of those several hundred, I say, guys, here's the ones that I like the best. Here's where I'm getting in. Here's where I'm selling. That's what people are paying for.
I see.
It's
Okay.
basically me to do all the hard work.
Okay. And then you would show that. You'd say, hey, take a look.
Correct. We have a portfolio that can see updates and so forth.
And so in my Morpheus portfolio for my dollar that I've given to you, that you split up into we would agree what it's going to go into, if it's just crypto, if it's something else, and then.
Yeah, we don't currently have a fund for stocks, only for crypto.
Okay.
Right.
Okay. Interesting. Okay. And so and you give me updates and you tell me when you're trading and you're getting out of the one that I liked and going into something else.
Actually, right. For the newsletter, like we always update every day. We send trade alerts, tell you when we're getting in, when we're getting out.
Yeah.
If somebody invests in our fund, though, because it's DeFi, I don't even have to tell you anything. You can go to the website, see every single trade made, when it was made, what we bought, what we sold. It's all transparent because of smart contracts.
Right. And that's maybe the tool I was talking about earlier. So, okay. Well, good. Well, is there anything on the website that I missed that you'd want to talk about here that we could get a good soundbite for? I know I've tried to walk through what was important to me, but I may have missed the main point.
Sure. Well, I think that as a starting point, the blog is great.
Yeah.
The blog's got literally thousands of articles on there that teach my trading strategy. It's a combination of walkthroughs of past trades. Like we'll show, here's why we bought, where we did, here's where we sold, and we try to teach people the strategy. There's a lot of that on the blog just by reading. Both stocks and crypto are on the blog, so you can search by category. So you can learn a lot about that. We even also put out like trade alerts, like we're looking at buying it this week, here's why. So the blog's a great starting point. And then for the actual 2 services, there's crypto picks and there's stock picks. So you can sign up for either service, and that would give you access to the report with all the trades, and also basically being in the chat room, which is really nice. It's professionally moderated by me every day.
Huh. Okay.
That's the main things.
Okay, well, good. Well, that's interesting. All right, so I'm trying to look down here. Don't have any questions about the website here. I got through my quote. I know.
I'd say our Twitter feed is good.
Yeah.
We post a lot of trade ideas on our Twitter feed.
Yeah, and it's nice because it's you talking, right, and then showing with the chart.
Right.
And so it's not, I don't know what's expected on Twitter or not, but it felt like I was.
It's an educational stream, basically, if you follow it.
Yeah. Yeah, I didn't realize it had gone that far, Twitter. But, well, good. Well, so any other topics you wanted to bring up today? We've covered the books. We've covered the history a little bit. We covered that we had a big change into crypto, and you gave us some background on that, exposing the lack of familiarity I have with that market. And we've talked about how your Morpheus company and the online stuff that we could all go look at works, and we've given the names to that. Is there a Twitter handle or feed that your name is by?
Yes, we actually have 2 different Twitter, one for stocks, one for crypto.
Okay.
The one for crypto is MTG, Mary Tom George.
Okay.
_ crypto.
Okay.
MTG _ crypto. And then
that's Morpheus Trading Group _ crypto. Okay.
Exactly. MTG _ crypto. And then for stocks, it's just at Morpheus Trading.
Okay. Okay. Well, interesting. Well, let's jump off of the. That sounded like a good conclusion. The Roman Anton Podcast. We have 3 parts, and I thought of something while we were talking here. Maybe you and I could agree to a short clip of one of your recent releases that we could incorporate into our podcast to show how you go about analyzing the chart. Would that be something you could hand to Frank and me that we could sneak into this week and
Sure.
so it's in there?
Sure. I think a good thing would be to show you one of the videos on our YouTube channel.
Okay.
Just to get an idea of the type of analysis that we do.
Okay.
On Bitcoin.
Good. So Frank, the Roman Anton Podcast is in 3 parts. We have a talk like this, and then we have a performance. We've had musicians, we've had Muay Thai boxers, we've had basketball players, we've had Nigel Okens owns a magazine and is a publisher, and he read from one of his op-eds. And so we consider everything a performance. And so that will be your performance piece if we can sneak that and we can agree to the content and we get the waiver from you or the blessing to put it in there. But I think, Frank, that'll be cool. It's not something we tried before, and we like to fool around with new ways of doing the performance piece. We don't want to say you have to go live on mic and sweat it out, play a new song that you haven't played before. But that, I think we just agreed that'll be our second piece. And then the third piece we do is we go somewhere that you either like, is your favorite place, or you're interested in. We've been all over Bangkok. We've been down on the river. We've been on the Klongs here to look at the water taxis. We've been across the street to the Benjikiti Park. We had mentioned doing one of two things here, going to the giant swing, which I was going to look for the Thai name, which I'm going to slaughter here, which is Sao Chingcha. I didn't realize this was has a Brahmin origin that goes back to Rama I, the first king of this current dynasty, which makes it several hundred years old, and that actually it used to have a swinging ceremony.
I read about that this morning when you were.
Yeah, but I reached out to someone. I didn't know this. Deron was saying to me, I think you stepped out of the room before, Frank, that he has a band that he plays with and that they played at Queen Bee one night.
Try.
And so we agreed that would be a top spot. So I messaged John to see if we could swing by Queen Bee to tape there. So we don't actually know where we're going to part 3. So part 3 is going to be a surprise event. But look, I think, what's that? Yeah, but they play at 6. Yeah, so I'm not trying to have a debate with you here, but yeah, we can figure this out. But I was just trying to point out that the Roman Anton podcast will have 3 parts again, even though we didn't see the performance here. But does that sound good for you? Well, so we'll figure it out after we hang up here, and then we'll head to one of those 2 spots and do a little shorty.
Sounds great.
Yeah, and what I'd like to do is have you come back in a little while after we get a chance to go online and look at a little more and maybe read through the books. Maybe there'll be more to discuss, but maybe we'll have a better view of trading, or maybe we could bring other guests in to talk as well if you got friends or folks that you work with. Sure. But the technology behind what you're doing and the way you're able to show this online really is very cool to me.
Thank you.
And so, Frank and I get hamstrung by a lot of our technology in terms of editing and stuff, but I thought, wow, you're doing a great job with that. And I know you've obviously,
appreciate that.
There's a magician behind the curtain as well on that too that you're doing, but it looks cool. And so I'd like to come back and revisit, some of the business dynamic of how you've set up your shop and how it works so seamlessly.
Sure.
If you're interested. But it's been a pleasure having you come in today.
Thanks for having me, Roman. I enjoyed it.
Yeah. Was there anything else you were hoping to have accomplished here? Did you say hello to everyone you wanted to say hello to, or get the names out of all your social media? Did we cover all that?
Yeah, I think so. I think everything's
good.
Everything's good there. Yeah.
Okay. Perfect. Well, let's get out of here then, Frank. We'll pack it up and we'll hit the road somewhere. Thank you. All right.
Days
Great.
have been challenging for crypto investors, to say the least, as Bitcoin failed a bullish reversal attempt on January 20th and plunged 22% from a high of 43,500 down to a low around 34,000 over a 2-day period before stabilizing around 35,000 over the weekend. Altcoins were hit equally hard, with most of them falling even more than Bitcoin. Will the bleeding soon dry up and lead to a recovery in crypto, or is Bitcoin now positioned for even lower prices? In this video, we look at the big picture with a top-down chart view of Bitcoin to show how the price of Bitcoin has reacted to previous sell-offs over the years. In doing so, we aim to shed some light on the current situation and help you to understand the big picture of where we are in the crypto cycle. If you're relatively new to trading crypto, it's crucial that you first understand the historical cycles that Bitcoin has repeated with high reliability since its creation in 2010. Bitcoin tends to operate in periods of 4 years that are known as a supercycle. Historically, each supercycle has lasted about 4 years, with each cycle ending in a sharp sell-off that eventually leads to new all-time highs when the next cycle begins. Let's take a look at what we're referring to help get some insight as to the big picture and the long-term view. What you're looking at here is a monthly chart going back to just towards the end of 2011. It's a monthly chart, so each bar you see here is 1 month of price action. So we're going back about 10 years. So the first 4-year cycle started to end around November of 2013. And if we look at measure the pullback that we had from the top of that peak, we peaked out just around a little bit over $1,000. Bitcoin was trading at as of November 2013. And we found a bottom and formed a low at about 150. So from 1,100 down to 150, you can see was a decline of about 86%. And that 86% decline stretched from November 2013 all the way to the lows that were formed in January of 2015. So basically lasted a whole year, actually about 13 months was the pullback, 86% off the highs. Now, if we fast forward 4 more years, the next time this same cycle occurred was in late 2017. And coincidentally, or not, we actually formed a peak again right around the same time in December of 2017. And let's go ahead and measure the decline. Again, from December all the way down to the lows, we see that we had a decline of about 84%. And again, this went from December 2017 until the lows that were formed right around January 2019. Notice the similarities, 13 months and almost the exact same correction, 86% and 84%. Now, an 86% correction back in 2013, if it was the stock market, you would think it's over and that's the end of the stock market. But this is crypto, and crypto is volatile in both directions. So in both cases, this correction of roughly 85% in 2013 to 14, in 2017 to 2018, in both cases, it eventually led to new all-time highs within a period of several years later. And let's go ahead now and see where we're at, because the last time this cycle started was November of 2017. And if we fast forward 4 years, that means November 2021. And guess what? It looks like we're starting the same thing again, because we see we had a peak here, a new all-time high was formed in November 2021. And currently, if we look, we see currently we're down about 49% from those highs. One thing that's important to note is each time we form a new highs within the cycle, the pullback has not violated the highs of the previous cycle. So for example, when we pulled back 86% back in 2013, notice how the lows of that pullback actually held at the previous all-time highs of the previous cycle. We did not go below that. And then again, in 2017, despite an 84% pullback, we held well above the highs, the all-time highs of the previous cycle, which was back here around the 1,000 mark. We held above that. So now we've started another cycle, and we've already pulled back 49%. And if that pattern holds true, that would mean we would not violate the highs of the previous cycle, which is right around 20,000. But if we're only down 49% only, does that mean that we're going to have to drop all the way down to 85% again before we start to head back up? Well, not necessarily. Now let's go ahead and zoom in from a long-term view to an intermediate-term view to see what's been happening over the past year or so. So now we're looking at a weekly chart. So each bar is 1 week of price action. And you can see 2021 started here. So this is basically the past year that you're looking at here on the screen. Now, as we mentioned earlier, the current pullback that we have in the market goes from a high of 69,000 that was set actually back in November for the third time in a row out of these 4-year cycles. November was the high. And currently, we are on a pullback, and the pullback at the lows was about 50% deep, currently about 49% off the highs. Now, what's notable is that we actually also had a similar pullback back in April of 2021 when we formed an all-time high of 65,000, and we pulled back all the way down to about that's about 29,600, which was a 54% pullback from the highs. Now, what's interesting about this pullback from April to July of last summer is that within a few months later, we were all the way back up at new all-time highs, despite a 54% pullback. Now, what surprised a lot of people, and it was surprising to us as well, is that we actually expected to see lower prices when we came down in July, because we were consolidating at the lows for several months, and it looked like we were going to bounce and roll over to form low prices, but apparently the whales and institutions started stepping in and rallied the price right back up off those lows. And there was some definite institutional buying support there. But just as we had institutions and whales moving the price back up, now we see the price right back down. Here we had these big green bars. Now we've got some big red bars, and we're pretty much right back where we started, where we were in July of last year. Now, if we look at the lows from last summer, the lows are actually, as I mentioned, right around the 29,000 mark, which I drew a horizontal line, you can see, and we're currently hanging out right around the 35,000 mark. So from 35 down to this, the low of last summer support is about a 6,000 point drop, or about price is currently about 20% higher than the lows of July 2021. So we may get a decent bounce in the short term, which we're going to look at shortly. But as for the intermediate term, we're really looking at this 29,000 to 30,000 area as a major level of horizontal price support. We can see here kind of the channel between the lows of these wicks and the bodies, right around, actually it's about the 20, just below 29 up to about the 32,000 area. So look for this area to be a major level of intermediate term support in the coming weeks. And that's what we're looking for, is expecting to come down a little bit more after we maybe bounce a little bit in the short term, but we do expect these lows to be very significant. We believe that this time around in this cycle, this 29 to 30,000 range is where institutions actually started stepping in, big players started coming into the market. And we don't believe we had that in the last cycle 4 years ago, because we're just now starting to gain institutional level adoption, such as Michael Saylor buying into Bitcoin for MicroStrategy, his company. He's got an average price right around 29,000. And we believe that there was a lot of institutional support that stepped in here to run the price back up when we pulled back. So as a result, if we're getting a pullback back down to this level, we do believe that institutions are going to want to protect their investment and try to support the price. So we may not rally right back up, but what we think is a likely scenario is a period of sideways consolidation. Remember that prices can correct one of two ways. We can either have a correction by price, which is a retracement, or we can have a correction by time, which is sideways consolidation. So a very likely scenario is that we could pull back to the 29 to 32,000 range and just trade sideways for the next year. Okay. And if we do that, that wouldn't be such a bad thing, because we'd find some tradable moves in the short term and some altcoins with relative strength as well. And we believe that this time around, rather than dropping all the way down 85%, that we're going to more likely see sideways consolidation. But of course, we trade what we see in the market, not what we think. So anything is possible. We must be prepared for that. But if we had an 85% correction from the highs, that would actually take us below the 20,000 mark. It would take us all the way down to about 10,000, which would take us below those prior highs we showed you of the prior cycle. So we go back to the monthly chart, we can see from the prior cycle here, the highs right around 20,000. So if we went all the way down to 85% correction, we'd go below that. And that hasn't happened yet. It's possible, but it hasn't happened in any of these cycles. So for now, the most likely scenario is looking to find major support around 29 to 32,000 in the intermediate term. Now let's zoom into the shorter term. Now looking at the shorter term, where we might see the price action take us over the next couple of weeks, let's take a look first of all at the channel that we have that's developed from the prior highs at 65,000 up to the most recent all-time highs at 69,000. We can see the trend line there, and if we draw that channel down, we extend that channel. What's very interesting, notice how the upper channel resistance from the all-time highs from 65 to 69,000, the angle of that channel also correlates to support on the lower end, and we're approaching that support level. So we may see a significant bounce as we come into support of this channel that we've had here in place over the past couple months. And if we do, then most likely we get some type of a Fibonacci retracement. Or drilling down to the daily chart time frame, we can see that right around the 39,500 level is going to be resistance, because that was our prior level of support that we recently spoke about in a blog post, where we said that Bitcoin had support around 39,500, but that support has been broken. Notice how we broke below the prior lows here, and that happened just last week when we broke below that 39,500 level. So technical analysis says that a prior level of support becomes a new resistance after the support is broken. So therefore, we now expect any bounce to run into resistance right around just below the 40,000 level. But if we get past that, then we could definitely see a bounce up to about the 44,000, the prior highs there. So we're looking for a bounce in the short term from the 39,000 up to about the 45,000 range in Bitcoin, which may provide a nice tradable bounce in the altcoin market as well, because a lot of the altcoins are beaten up much more than Bitcoin. Some of them are down 70, 80% off their highs. And it feels like the whales are setting up for a nice altcoin rally once we've got some momentum and a base established, at least in the short term, on Bitcoin. So we'll be definitely keeping our eyes out for that. For now, our portfolio, the Morpheus crypto portfolio, is all cash, but we will be keeping an eye out for some short-term tradable opportunities as we come into support. Now, as we've discussed recently in the chat room, crypto has been tied to the performance of the NASDAQ lately, and the stock market has been selling off due in part to the federal government stating that they will have a hawkish stance on raising rates to combat inflation throughout this year. Now, this Wednesday, on the 26th of January, we've got a meeting of the Fed, and they will announce their stance, their latest stance, and their monetary policy. And the reaction to that is going to largely determine the short-term trend of crypto. Now, keep in mind, the Feds have to walk a balancing act here because obviously they want to combat inflation, so raising rates is the way to do so. But that also has caused a negative effect on the stock market, so that they're not going to want to see trillions and trillions of dollars of wealth wiped out from the stock market with a much bigger correction, because of course that would have its own implications for the economy as well. So they do want to see it fall a little bit and come back into normal correction levels. And the market was pretty overheated. So it'll be very interesting to see what the Fed does, if they are going to, in fact, back off on their hawkish stance of raising rates, or if they will proceed and let things play out as they will. So that's largely what's going to determine, I think, the next move in crypto in the short term. But the short term is just noise. And as we showed you, the 4-year super cycle is really what matters. And it looks like if things are going to be slightly different this time, that we may be keeping an eye out for not much lower levels and perhaps a sideways consolidation as we enter the next phase of the super cycle. Again, we believe there's much more institutional adoption and institutional players than we had in previous cycles that may actually cause the cycles to lengthen and may actually limit the amount of the downside so that we don't have a full 85% correction, which would violate the prior highs of the all-time highs of the prior cycle. So we believe that maybe worst case scenario would be coming down to that 20,000 level, which would be about a 70% correction. But that would be major support because that was the prior highs of the prior cycle. But for now, we're looking at around the 29 to 32,000 level. So we hope this has been helpful to give you some insight on the big picture of Bitcoin and where we may be headed. It can be definitely scary when things are falling as quickly as they are, but this is crypto, and what goes down goes up just as fast in crypto. And we just need to basically be ready to take advantage of the market's next opportunity. And most importantly, be able to trade what we see and not what we think, because anything is possible in trading.
Changchonsi? No, what do we say? What am I saying? I've already forgot.
Sao Chingcha.
Sao Chingcha. All right. Okay, we are ready here. It's Roman Anton Podcast, Part 3. We are at Sao Chingcha.
I think so.
Sao Chingcha is how we're saying it. We got the buses going by. But I like this thing. It's an old Brahmin monument or statue that's Rama I set up here in Bangkok. And so we're going to have some people walking on through in a second here. Well, that's fine. We love this. How are you guys doing? Good. And so I'm with Deron Wagner again here from Florida, from Pennsylvania, from the U.S., and we were talking today about cryptocurrency. And part 3 of the podcast is we always try and stop by someplace cool in Bangkok. And so, you been here before?
I haven't. Somehow or other, as long as I've lived here, I've never been here.
Yeah, it's strange, huh? It's a little out of the ordinary. How are you? Hello. Good. So I think we're recording. Frank, I think you can hear us okay? All right, good. A little noisy today, but this part, I think this to me is part of Chinatown, but we're still close to the Grand Palace.
Right.
Yeah.
I've been there before.
Yeah, right.
The Grand Palace.
So I came here during COVID and they wouldn't let us get out of the car to check it out. Or maybe they did, but we felt like we couldn't come. But I've wanted to come back. And, I think it's one of these sort of multicultural monuments from what you read on Wiki, right?
Yeah,
it's just, there's a lot of background to this. It's not overtly one thing or another. There's a lot of history to this. They've done a lot of stuff in the museums in terms of bringing it in or fixing it up over the years, but it's pretty cool. And I like this area. I think, Frank, we were down the road at Talat Noi the other time, a couple months back, at a coffee shop and at a spot that we really liked, but I don't make it down this area too much. Do you?
Well, in English, this is the giant swing, right?
The giant swing.
The giant swing.
Very good.
Yeah, good we should mention that.
He's helping me with it. But if you walk down this road, which says Banang Muang or something like that, Titong Road, there's all sorts of shops. There are all sorts of shops where you can buy, religious figures for your yard or for your home.
Chinese restaurants too.
There's a lot of restaurants here too, but this street is awesome here. So if you can get to this monument, if you're visiting town, and you can walk up to the top of it, up this street here, it's really cool. Ton of very cool shops. Sunday, some of them are closed, but most other days they're open. Come on through, guys. Sorry about that. Okay. Yeah, but Grand Palace, do you have a regular tour that you do with people or no?
If it's like my family or friends' first time in town, we usually will take them the reclining Buddha and Grand Palace and all that. Yeah.
I'm not exactly
but
sure.
This has never been on the agenda though. So maybe I got to add this to my tours now.
I'm not exactly.
My wife's actually the tour guide, so she's the one that does.
Well, you got to ask her then, because I'm not exactly sure what you do when you get here, but it looks cool.
It's a nice swing.
Right. Exactly. And there's a lot of history to this one, but I like this neighborhood. So if you can park or get down here, it's great for walking and eating and snacking and drinking, having a drink, coffee or whatever you're looking for. But that's all I tend to do here. So hey, look, Deron, it was great meeting you today. It was great hanging out.
Thanks a lot.
I appreciate it. I'm looking forward to talking to you more, learning crypto from you. I'm looking forward to reading your website. I mean, there's some great articles on there, so I really appreciate your coming out. But here we are, Roman Anton Podcast in Bangkok, Thailand, Step 3. We're at this monument. Stop by if you come to town. Appreciate it. Franco, that's all we got. Thank you. All right, we'll check.
1, 2, 3, quiet.